Hey guys, welcome to my channel Success Sequence where we daily analyze Nifty and Bank Nifty for an important move and expected level. So in my last video, I did mention that market is trading at a very high level and I am expecting some sort of confirmation to go long in this kind of market. So let us begin our today's analysis and understand why we are not going long and why it is a correct decision that we should not go long further till the time we get a confirmation in the move. So let us start with the option activity range. What I can observe is the 10,000 to 10,600 is the option activity range, 400 points on the upside and 200 points on a downside. Now call option data overall is suggesting that the market participants are expecting a stable to bearish kind of move. Maximum change in open interest being at a 10,600 level with a stable to bearish kind of outlook, and the recent call writing at a near to the spot is at around 10,200. So all in all, option data are suggesting that the market participants are not expecting any sort of significant up move as far as the data is concerned. So now let us analyze the put data. I can see that there are a good amount of put writing happened at a level of 10,150 to 10,300, so which is again in contradiction with the position made by the call players, and I can see that the put participants are expecting a stable to bullish kind of move and the call participants are expecting a stable to bearish kind of move. But one thing is very sure, from 10,1500 onwards both the players are expecting the same sort of move. So stable to bearish kind of market up from high level is what market participants are expecting. So now let us analyze the candlestick moving average and various other indicators that we use to analyze what could be the next move. So as you can see, market opened gap up, got some rejection at a high level, again went up, came down, again received a rejection at a lower level, and now finally trading uh, at a higher level again with a dodgy kind of formation, which is suggesting that there is an uncertainty in the minds of both the bull and bearish players. So what can happen from now, from ahead here is either the market will go down by breaking 10,205 level and the target could be 10,170, and the final target would be the gap will be filled. So 10,100 is the level from where we can see downside from the high level. Otherwise, if the market continues to trade on a high level, it needs to break now the 10,240 mark, and if that at all that happens, we need to observe the option chart data, how strong the option participants are suggesting, and then only we can take a move. So for that we need to again wait. For MACD, as you can see, is stalling at a high level, so that is also not good, and RSI is also stalling. CCI is trading at a highest level. If we see 200 value at a CCI, we can expect that the up move has losing steam, and now we will see some sort of down move. Again, if you see the historic volatility, the volatility has dropped today quite significantly, so that is also a reason you will see the price action today has been limited in a sort of broad range, I could say. So we need to make a clear cut analysis of the market and when it should go. So as far as the volatility is concerned, volatility can go down a bit from here, but what I can expect is it is already trading at a lower level and I am expecting the volatility to increase, and if at all that happens with the move that the indicators are suggesting, we are definitely going to see some sort of down move going ahead. So that was my analysis for the Nifty. Now let us quickly find out what the Bank Nifty is suggesting and what are the levels that you should watch out for as far as the Bank Nifty is concerned. So as far as the option activity chain goes, 24,500 to 25,000 is the broad range, 300 points on an upside and 200 points on downside. So again, what I can see here is a call writing has happened at a high level. So maximum call writing has happened at a level of 24,900, where the an aggressive kind of change in open interest has been happening at a high level uh, of a Bank Nifty strike prices. So 25,000 is the maximum upside what market participants are expecting, but still what today's option chart data suggests is that market participants are expecting some sort of pause from now on, and that is what is being reflected by the call participants position. Again, if we see put side, I can see the put long covering and a put writing at a lower level. So this is clearly suggests that the market participants are expecting a support at a 24,500 level, 24,600 level, but the support will not likely to continue because they are expecting that the high levels will not prevail. So if at all market will try to trade at a high level, and if you see the put short covering gets continued, you can definitely expect a some sort of down move, but you need to also see a same amount of position being created in a call writing. So that is what the data is suggesting. If you analyze the candlestick behavior, you can see that the market has tried to gone up, came down, and now it is also trading quite at a lower level. So what I can expect from now is that once it breaks that 8 days exponential moving average support, it can see a down move till 24,145. Otherwise, if it gets support at 8 days exponential moving average, it will continue its journey towards upside. First target and strong resistance will be 24,700, I would say. The next target would be 24,777 or 24,780, as you can see. So final the target would be 24,876, and if this level gets broken with a good amount of support or good amount of position with supporting position in option chart data, we can definitely go long and expect a final target of 25,105. But as far as today's data is concerned, I don't see anything that is happening. What you need to do is wait and observe how the spot prices behaves at a 8 days exponential moving average. As always, as we seen in the Nifty, MACD, RSI, and CCI all are stalling at a high level. Volatility has gone down. That is the only reason you see a range bound kind of scenario in the market today. So I think we need to wait. If you want to trade specific to a level, you can definitely watch out for the levels to get broken first, and then only you can definitely check the option chart data and how the candlestick and indicators are suggesting, and then you can take a definite move. So I'm still in a wait and watch mode, and until and unless I get a confirmation, I am not going to trade in this kind of market where if you buy an option, you will only lose your money due to time decay and range bound market scenario. So that's it for the today's video, guys. As always, if you like my video, please hit the like button, subscribe to my channel, share it to your friends and family, and if you have any doubt, you can always mention it in the comment section of the video. Thank you.